I'll share my screen again. It shows the growth versus value performance, the growth versus value spread. So first off, I think value is going to outperform growth. It has been outperforming growth. If you look at stocks like Cloud Index, WCLD, they topped out in February. Uber topped out earlier this year. Many expensive stocks have topped out. Now, the Mag 4 names that we talked about, they're actually much cheaper than these other stocks like Snowflake, which have a forward P of over 100. Okay, so it's actually a misconception that value hasn't worked. I mean, you've got to get the right themes. So look, Bank of America stock is up 700% since 2011. Actually, any of the mega banks are around that level, 700%, 600%, 800%. So that's a bank. Look at JP Morgan. We bought JP Morgan in the banking crisis last year. Let me show you JP Morgan. I think people's eyes go in the back of their heads when they see the returns because they don't expect these businesses to generate this kind of return, and they would be wrong. So the 1-year return on JP Morgan is 68%. That's pretty good. The 68% is outpacing the S&P 500, outpacing QQQ. Yeah, I think value is going to do quite well, especially with interest rates lowering. You have companies that can refinance their debt. That's going to improve their operating earnings. It's going to take less left tail risk as well, less insolvency risk. By the way, the category that did the best after Trump won in 2016 were these value stocks and cyclicals and financials. So that's what you're seeing happen right now. So growth stocks make the headlines, but if you pay at too high a price, then you don't perform. So I like growth stocks if I get a good price. We bought AppLovin, which is like I only own like 5 tech stocks, and that was one of them. I have 30 other stocks. I can tell you we're beating the market. I can tell you that. I want to get audited returns that are GIPS compliant at year end to show you all that. But if you're buying ARM, let me pull up ARM. ARM is very expensive, right? How about, actually, I'm pull up an index. So you get a broader based picture here. So therefore you won't see that I'm cherry picking a name or something like that, right? So let's share my screen again. So this is the WCLD index. It's now just back to where it was in February. It's lagged considerably. It has not even come back to the 2021 highs. So imagine you were someone here saying, oh, I really want to buy growth stocks. You want to buy like Cathie Wood's ARK fund or something somewhere here because it had a big run. You're still down significantly. Now compare that to say the QQQ. It's not much better. The QQQ, of course, is dominated by the names we've been talking about. You're at all-time highs, right? So the valuation matters. Evaluation even matters in growth stocks. We did a back test, actually. I did a 3-year back test, and we picked the cheapest half of all stocks in the QQQ and rebalanced quarterly. It crushes the QQQ. Buying tech stocks that have value beats owning expensive tech stocks. So people misunderstand growth versus value in a very significant way.